Well, thank you, Mary Lou, and once again, welcome everybody, and thank you for coming back. Today we're going to talk, of course, about robotic process automation and auditing. But before we do, a couple of special thank yous. First, thank yous to those at GYF, Mary Lou, Carissa, and Glenn, who make this possible and accommodate all of these things and overcome the technical issues that Mary Lou referred to. We actually thoroughly appreciate that, even more so in a reporting year. Secondly, and probably most importantly today, we want to recognize the fact that it is November 11th. And of course, November 11th is Veterans Day. And on Veterans Day, we want to take a moment to recognize all of those that we know in our families and our friends and in our circles who have served this country that so many of us call home. So thank you very much to those who served and those who continue to serve. As we get back to this program and we talk about robotic, so I'm moving the slide forward, I'm so sorry. Robotic process automation and auditing, we're going to talk about several things that robotic process automation is, or RPA, what it is not. Joining me today in this presentation will be Jason Hardy and Austin Everett from our firm. Make sure we get the pictures up there. Jason is a senior manager in our audit and assurance group, and Austin Everett is a senior associate in our audit and assurance group. So we'll look forward to hearing from Jason and Austin momentarily. So we dive into it a little bit and say, what is RPA? What is robotic process automation? Well, it's a number of things, and it's also often misunderstood. It's commonly referred to as bots. People think about these robotic processes and they refer to them as bots. But they're computer-coded rules, computer-coded software-based rules that automate certain human tasks. The important things to remember is that they only handle tasks that they're specifically trained to handle. They actually do it in the same way that the human users would. It's as if it's a person doing it. It's merely automated in the process and written to perform that task. There's a lot of things that RPA is not. RPA is not artificial intelligence in the far right hand of your screen. We'll have some examples of what is artificial intelligence and what is RPA. It is also not a replacement for knowledge workers. There's a difference between knowledge tasks and rote tasks, and that's profound in the RPA world. It does not compromise or modify the underlying IT structure. Remember that as Jason gets into some of his considerations for RPA and auditing, both for the auditees and the auditors. RPA versus artificial intelligence, both of them are buzzwords. Artificial intelligence, maybe even the bigger buzzwords. Artificial intelligence actually learns from data patterns. It learns, it processes, it actually replicates certain thought processes, and it makes judgments. It makes decisions. It informs decisions. RPA does not. It merely replicates human actions, not human cognitive processes. With that in mind, that will help explain and inform a lot of what we're going to talk about as we go through this momentarily. But first, we come to our first polling question. How familiar are you with RPA and AI? We'll take a moment to answer the polling question, and we'll come back to the presentation. I'm going to continue the presentation as many of you think about this and answer the polling question. This slide shows a lot of things that RPA can do, and this is merely a small subset of what it can do. But when you look at this list, it really indicates a number of things. It indicates a number of opportunities in my mind to make things more efficient, lower error rates, other things along those lines. It can fill in forms. Think of the long form completion things. Sometimes when you're filling out forms now, even to register for this class, there were some autofill moments. Those autofill moments are actually very miniature versions of RPA applications. It can follow decision rules. Remember, not cognitive, it's not AI, it's not making the decision, it's not formulating a decision based on data, it's merely following decision rules. Think of if-then statements for those of us old enough to have done programming back in the day. It can move files among folders. When one finishes something for this year and one wants to move it to next year's file or move it into, I hope I never have to deal with it file, it can actually perform those processes for you too. It can log into enterprise systems. It can log into your ERP system. It can log into Salesforce.com. It can log into SAP. It can log into any number of things. Remember, as if it was a human performing the function. Somewhat tongue-in-cheek, so this is an observation, not an encouragement. A creative application for RPA would be an application that caused your employer to think you were working by virtue of your activity in your server while you were home, perhaps not working remotely. RPA also is excellent for copying and pasting, for collecting statistics, for doing various calculations. If there weren't already so many depreciation packages out there, think of RPA for depreciation function. We may be thinking about that for organizations with a whole lot of leased assets as they implement a new lease standard. A number of things that it can and cannot do. The next slide actually shows a wheel. This wheel emphasizes several benefits of RPA. You'll see that they overlap and in large measure are repetitive. It's emphasizing, and the source of this, of course, is noted. It's emphasizing, among other things, a lower error rate. It's emphasizing, among other things, more uptime. It's emphasizing, amongst other things, sparing people mundane tasks to use them for more important cognitive tasks. I think as we move into a continuing era of tight employment, shortage of capable workers, RPA is going to become increasingly used to address both productivity but also capacity in addition to accuracy type focuses. What's the status of RPA? Well, there's this curve that the Gartner group has put together called the hype cycle. Gartner's hype cycle is applied to any new technology, and they do it very accurately in most cases, but sometimes humorously when you look at it or look at the names of the spots on their cycle. RPA is clearly through the innovation stage, the innovative stage on the Gartner hype cycle, at least in my mind. I think it's also through the period of inflated expectations. If you look back at a bunch of articles from circa 2015 to 2018, you saw a lot of inflated expectations for RPA and how quickly it would be implemented and how quickly it would be rolled out. I think we've moved past that period of inflated expectations. And I think we're also at this point through what Gartner calls the trough of disillusionment. Gartner, amongst others, now views that RPA is starting the upslope, the slope of enlightenment, they call it. But that really means more and more adoption and probably an accelerating rate of adoption. So right now we see rapid deployment of RPA. We see rapid and accelerating, as I just mentioned. We see that there's still a long way to go. There's still really an early stage in this, and while you see a lot of applications already, many of them you don't even realize you're using when you're interacting with a trading partner. There are several segments of the business society that have lagged. Auditing is actually one of those lagging areas. If you looked at it on the surface, and if you looked at it 5 years ago, auditing was predicted to be one of the early adopters rather than a laggard. But auditing is still an area of opportunity and rapid growth, both for the auditor and the auditee. What are the constraints to moving forward with RPA? Well, there are many, and they're not necessarily in order of priority on this slide, but we're going to go from the top left-hand corner. Technology is a constraint. Most organizations, even small, have the technology to do some of these things. Most have the opportunity to use tools such as Power BI and many other tools. But technology available to an organization isn't really what we mean by this. We mean the ability of the technology to interact. If you wanted to build a bot to do your bank reconciliation, your ERP software is more likely than not technologically capable. If you have a mainline bank, it's probably technologically capable. It is possible that you have a smaller bank, a credit union, or other organization that would provide the technological constraint. So the technology is relevant in every element that's touched by the bot as it's gathering data, processing information, populating tables, and whatnot. The time and the cost is very important. Time and cost is an irony in so many ways. In times when most folks that are working find themselves short-staffed, I think many of us in this call would agree that those of us who are choosing to work in this era are finding themselves largely overextended and fatigued. As I've joked with many, those who are not choosing to work in this era, I'm not sure what they're doing, but I know they're on the parkway when I go home at night. But the irony of that is when we most need the efficiency that comes from RPA, we have the least time to put into developing it. And that remains a meaningful constraint. The fact that one identifies the need means that there's a constraint that often precludes or delays the opportunity to allocate the resources to do exactly that. RPA is very process specific. When I've seen errors made in overreaching for RPA, it's because the wish list is actually too strong, too long, too strong. I want to do A, B, C, and D, when maybe just A and B would have gotten it done. Remember, RPA is very process specific. Even when designing these, we want it to think. It's not going to think, it's merely going to do. Government regulation. You have to be very careful if you're in any industry that's subject to any government regulation that the RPA process is not violating some of the rules for your particular industry or the particular application you're using it for. And of course, company culture. Company culture is always a significant issue. Company culture can accelerate this. Company culture can decelerate this. Company culture can derail this process. I think we now have another polling question. Are RPAs in use in your organization? I'll give you a couple of seconds to think about that and answer the polling question. And as I continue momentarily, you will be able to read the results on your screen. I see a lot of no's. I was more curious about that one. No seems to be the winner by a reasonably clear majority. I think if we answer the same polling question in 3 years, that will be reversed. Now let's talk about utilizing RPA and auditing in particular. How do audit clients, how are they using RPA? Just think of financial and accounting areas amongst the most common things that we do. Do with RPA, that is, of course, due to the need for accuracy and consistency. Bank reconciliations, once again, applying cash receipts to outstanding receivable balances, so many more. It's routine, but there's a high need for accuracy and consistency. The repetitive nature of the transaction processing in many areas of finance and accounting makes it ripe for opportunity within RPA. The information is often gathered from fragmented systems. Well, we talked about the technology before and the need for consistent data. They can be fragmented systems. They can be one application in this area, another 3, 4, 5, multiple different applications. So long as the data is understandable by the bot, it can be gathered, it can be assimilated, it can be processed, reallocated, and used to gain ground in this area. We have high degree of dependency in both finance and accounting on data entry, on data manipulation, and on report generation. Report generation will likely be a rapidly increasing use of this tool. And I think when you look at those skill sets, I was reminded of something I saw about a month ago on the anniversary of the U.S. Steel building. And in talking to somebody that used to work there in the era when the building was open, they commented that an entire floor, and that's a large footprint floor, in that building was devoted just to folks who did nothing but gather data to prepare monthly management reports. As that's obviously been updated dramatically since then, we think it will continue to be updated dramatically again with increasing use of RPA. This slide is much too small for most of you to read, so I'm just going to highlight a few points talking about the high, low, and medium opportunities for RPA. Think of high opportunities for RPA in several of the areas, such as updating customer data. Again, applying receipts for cash receipts. Bank reconciliation is probably the third time I've repeated it. Think of customer and vendor master files and employee master files. The bot can be very useful in updating those, making sure that an address update flows to all of the rippling areas where one keeps address information for customers, for vendors, for employees, for alumni, retirees, and whatnot. Think of all the areas applicable for customer orders. What is the order status? Where is it? When was it shipped? When was it paid? How does this new order apply against the credit limit? All high opportunity areas. Think about validation of any type of data. Was the product shipped? Was the product relieved from inventory, the product that was on the PO? Was the product on the PO and relieved from inventory the same one that was on the shipping documentation and on the invoice? Any number of things like that, which are good audit control processes that historically have been done by human eyes and human intervention, can be benefited with at least some portion of automation. Continuing with some more common uses, but on the slide probably more visible to your eyes, we see cash and accounts receivable, and I think I've talked about these mostly already. More in accounts payable, processing charges to purchase orders and updating the ERP system, matching invoices against corresponding purchase orders. Same thing as receivables, but just the reverse cycle, purchase cycle versus sales cycle. Many, many common uses of RPA inside finance and accounting. Think of your financial and closing and reporting processes. If we go back a number of decades, it would take weeks even for a large company to close. It oftentimes takes middle market companies still 1, 2, sometimes even 3 months to get through a closing process. If you really break down that process, you see that a number of the tasks are repetitive in nature. They require consistency and accuracy. They have a finite pool of data that they draw from. And they would be then ripe for automation, at least in part. It's not an all or nothing equation. You can automate parts of the process without all of it. You can create journal entries with RPA. Think of what we used to refer to as standard journal entries, same distribution, different amounts. It's not doing the thought, it's just pulling in what happened that month and populating the distribution. Think of validating the journal entries. Did it happen? Did it land in the right spot? Think of low-risk account reconciliations. It's tedious to reconcile all of one's balance sheets accounts every closing period. Many of those are really not subject to much risk or fluctuation sometimes. A bot can go a long way to helping speed the closing process and be less intrusive to personnel. Think of things like dashboards and reports and board reports in varying degrees of complexity. Think of all of the time that many spend in those areas, and that should give rise to a lot of opportunity to automate that with some form of RPA. And just as we've introduced that thought, it's the perfect time to turn it over to Jason for a lot of specific examples in the use of RPA, both by auditors and by auditees. Jason?
Thank you, Jeff. So moving into the considerations for auditors, which I know we probably don't have a lot of auditors other than people at GYF on the line, but it's important for even our clients and anyone who's having an audit performed to understand what the auditors are going to be looking for and how the use of RPAs at your company may change the way that your auditors interact with you. So some of the auditor considerations are the impact on the control design and the operation. So with some larger organizations, there will be control forms or walkthroughs or policies already in place. All of those will need to be updated and shared with the auditors when RPAs are incorporated into a company's processes. It's also probably a great way to look for opportunities for RPAs as a company looks through what their current procedures are, their current systems are, and what each of the employees within the accounting function, what their roles are, or other functions, not just accounting, looking at what their roles are, what they do on a day-to-day basis, how many systems they use, and how those systems interact, both from a manual perspective and from an automatic perspective. Looking at the control designs and the responsibilities of your various staff and employees can be very insightful in terms of looking for opportunities for an RPA. So as Jeff mentioned before, when there is a lot of manual effort put in that is low risk and is very data heavy, that is an opportunity for an RPA when there's a lot of manual data entry or pulling of information from multiple systems that don't already talk. So looking through the controls that are in place, the procedures that are in place, and your system's workflow is a great way to look for an opportunity for RPAs, and also that's the information that needs to be shared with your auditors as you change your systems and once RPAs start to be integrated into your processes. One thing to be aware of, though, too, is that if the RPAs are new and are still in the process of being implemented or designed, errors can grow quickly before detection. So monitoring of the RPA and double checking versus your old manual processes probably still makes sense in those early days, weeks, months, or years of having the RPA in place, just as a verification that the process is continuing to work correctly and that the bot or the RPA has been designed and implemented correctly and continues to work with the systems that you have in place. It's also important to note that bot processes may inadvertently violate regulatory or reporting requirements, and there's a requirement for different skills to evaluate and assess risk. So as the auditors start to look at the information that's coming out of the bots or understand the RPAs that are in place, there's a certain level of understanding that needs to be shared with the auditors so that they can appropriately and efficiently continue to audit the controls or the transactions that are being processed by these RPAs, or to rely on the reports that are being generated by the RPAs. Some other considerations are that the protocols may need to be amended to include the automated processes and components, like I mentioned before. Updating of your internal control documentation as these RPAs are incorporated is very important, both for internal documentation purposes and for the purposes of sharing that information with your auditors. The review of the audit logs must also be performed to verify the accuracy of the RPA performance. Like I mentioned before, as the RPAs are incorporated early on, there should be some double checking and monitoring and verifying throughout the process to ensure that the right information is being input and that the RPA is working correctly and efficiently. One thing to be thinking about is the RPAs are very data driven, and it's important that the data going into those RPAs is good, because if garbage data is put in, then you're going to get garbage results out of the RPA. So it's important that when the RPA is being designed, that the parties that are designing it and using it know what the variables are, what fields need to be used, where's that data coming from, what format should it be in. So in some cases, these RPAs may have different levels to them. There may be a data validation RPA that runs first to make sure that if the processing RPA is looking for a date, that the information in field A is indeed a date and is not a dollar amount or a name or something along those lines. So it's important that the data that's going into these RPAs is accurate and follows the right structure. And then finally on this slide, comprehensive compliance checklists should be developed to meet necessary regulatory requirements in various different industries. Certainly there's going to be a lot more requirements in terms of documentation and compliance over RPAs in a banking situation or an investment situation versus in a manufacturing environment. Some other considerations are periodic feedback and review, like I've mentioned a number of times, to make sure that the RPAs continue to process the information correctly and that the data going into those RPAs is exactly what was intended to go into them. Documentation must clearly show how and where RPAs are being used. Like I mentioned before, updating those policies and procedures or accounting policy manuals will be important as RPAs start to be more widely used in small and middle market companies. And understanding of how the bots have had a direct impact on financial reporting is going to be critical in the audit process. There may be certain bots that are in place or RPAs that are in place that have no real impact on the audited financial statements or the financial statements as a whole. So those won't be areas of focus during the audit. Auditors are mostly going to be focused on anything that is having an HR impact or a reporting impact or a daily transaction processing impact. So moving into our next polling question here, what RPA benefits are most enticing to your organization? I know from one of the earlier polls that Jeff had, I think it was about 60% were not yet using RPAs in their organization. So maybe think about if you're not using them, where you think maybe the most attractive areas of RPA efficiency or effectiveness could help your organization. And I'll keep the slide up just for a minute, or the poll up just for a minute, to ensure that it doesn't disappear for anybody. So it looks like an even split between the efficiency and timeliness of the reporting and also the elimination of the need to enter certain data manually, both relatively evenly split, with also some additional insights or analysis. So moving into some more examples for applications of RPAs. Again, a little bit of an overview of the industry. A study that I had located indicated that the RPA market is expected to top about $1 billion annually in revenue, and that potential savings from RPAs that are being implemented for the organizations that are actually utilizing the RPAs is somewhere in the $5 to $7 trillion range, which is a very large range, but still a lot of money can be saved, and that's by about the year 2025. And the most interesting thing to me was that the RPA outputs could replace or surpass up to about 140 million full-time equivalents. Again, that's a very large number. It's probably a broad study. And that's not to say that the workforce would decrease, but one way to look at that is what could your employees be doing to grow the business as opposed to spending time on these manual processes. That doesn't mean job markets are in trouble necessarily. It just means that time could be more efficiently or effectively used elsewhere. So that's something to think about as RPAs start to grow more into the middle markets. In terms of where RPAs can be most effective, two of the terms that I came across were runner and repeater processes. So runner processes are simple and usually very few variables or data fields are going into them, and they're being done kind of in real time. So one example would be the pre-sorting of high volume transactions or processes. So one example would be if you have a high number of employees and you have a portal where people can apply for jobs to your organization through a website. And let's say you're getting, tens or hundreds of applications a day. There would be a runner RPA that could be in place that would filter through some of those applications to identify what departments certain people would be a fit for, or if their experience level is a good fit, or if their location matches up with a location that is hiring. So that would be an example of a runner RPA. Very simple, relatively real time in terms of how it's operating, and not a lot of data inputs or variables necessarily. Another example would be, or another option would be a repeater task. So a repeater task may have more variables, but it's going to be done a little bit less frequently, and the results will be generated less frequently. So think of something that could be done in a batch setting where you wouldn't need results or processes to be performed in real time, maybe daily, weekly, monthly, something along those lines. So when it comes to doing financial statement closings, like Jeff had mentioned before, some of those account reconciliations, that would be more of a repeater task that isn't being done in real time on a daily basis, but would be part of a periodic process. And again, anything that's repetitive and relatively predictable would be a good option for an RPA. Processes or systems that don't automatically sync or have the same language. So there are many clients that I have that have multiple systems. There might be one system that handles HR, another system that handles sales and development, and then you have your ERP system where the accounting is housed. In a lot of cases, those systems may not have been built in a way that they automatically sync or interact. So an RPA is a great tool or opportunity there that can get these systems talking without a lot of manual input. So if you think about a sales system that is not integrated with the ERP, those sales may be being entered either in a batch or on an individual basis, on a daily basis or a weekly basis. And it's a manual effort undertaken by the sales staff or the accounting staff. That would be an opportunity where an RPA or bot could go in, grab the information from the data fields, from the sales system, maybe from an output file, and automatically put that information into the ERP system or the accounting system. And it reduces the opportunity for manual errors or miskeying of information, and it allows the sales or the accounting staff to be focusing on other efforts as opposed to spending time manually keying transactions in. So again, processes that require significant human input but lack judgment. So this isn't going to be a situation where the RPA is going to determine what your bad debts are or the likelihood of collecting cash on an old receivable from a customer, because that requires more human judgment and determination based on history or your relationship with that client. We're looking more at automated processes that are really just dealing with data and not any type of input. So it may be a lot of people think that these RPAs are only doable for large organizations with deep pockets. But really what we're seeing is that RPA application isn't just for large corporations, and small to medium-sized companies and even nonprofits and organizations like that actually have a lot of advantages in terms of incorporating and developing RPAs, because typically there are fewer systems, fewer forms of data, fewer users, and less complexity and volume. So if it's going to be a lot easier for an organization that is a single manufacturing facility to incorporate an RPA that's going to integrate their sales system or their inventory system and their ERP and accounting system, than it would be for necessarily a Fortune 500 company that has operations throughout the country and has many different types of systems in use. So again, it may not always be cheap. There could be some cost benefit involved there for a small to medium-sized company, but the complexity is a lot lower. There's a lot of fewer users, less data input, less data systems, and that's something to think about as you start to see more changing in your specific industries with regard to the use of RPAs. So, sorry, my slide did not move. So some examples of RPA in practice. So first we're going to talk about at company level or at a client level, not necessarily tools for auditors. Austin's going to get into that a little bit later. But some examples in practice would be inventory. So purchasing and inventory level management can be a prime area to get an RPA incorporated into your system. So just-in-time inventory is prone to human error. If your inventory purchasing agent or your inventory manager is not on top of their game or is not paying attention to incoming sales or the availability of inventory or raw materials, which we know right now with how long it's taking and the lead times to get raw materials, just-in-time inventory could be very difficult to manage right now from a manual perspective. So having a system that looks at what your needs are to meet your backlog and what you currently have in your system and what the lead times are from your vendors and your raw materials providers could be key and could take a lot off the plate of your purchasing department and is an area that could be primed for incorporating an RPA. Another place that we're seeing RPAs used with regard to inventory is cycle counting. So cycle counting can have a lot of benefits for companies where instead of stopping production periodically throughout the year or at year end to do full inventory counts, cycle counting and the use of an RPA can be utilized where an employee within the production department, accounting department, or inventory management department would come in each day, and the system would generate the cycle counts for the day using a certain algorithm or formula to ensure that higher risk items are counted more frequently and that lower risk items or lower turnover items are counted a little bit less frequently. So using an RPA that would generate based on inventory classification, level of movement, and risk in terms of number of units on hand or individually significant high value items is a way that an RPA could be used in that cycle counting process. Handling of dead stock is another opportunity for an RPA. An RPA could look at when was the last time certain inventory SKUs or units were either purchased or sold or moved into production. And if there are items that have not moved for a certain period of time, an RPA would be able to flag those items in your system and present a report to management that could be further analyzed to determine what to do with that stock, if it's usable, how it could be used on an upcoming job. Tracking of storage and shipping costs could be a beneficial use of an RPA. Tracking how much it costs to ship or store certain inventory by different product lines or by different SKUs could be insightful in terms of what your carrying costs are for that inventory. And then just overall increased visibility and tracking. Another area that an RPA could be beneficial in practice would be HR and payroll. So utilizing automated timekeeping and reporting is a form of an RPA. We've seen many of our clients moving away from manual time cards to using automated systems that use key fobs or codes. So as employees arrive at work, working in a manufacturing setting or even an office setting where they used to have a manual time card, they're able to use these fobs and track the hours that they are working, which would go into a automated system and could generate the hours worked and could generate the payroll runs essentially automatically. And it provides some additional security and verification in the form of the fobs or passwords, data verification in terms of a range of hours. The RPA could be set up to say no employee should be working 24 hours a day or 18 hours a day in most cases. So that's another form of data verification that could be used in the form of an RPA. And then, like I mentioned, automated reporting and submission of the time. There could still be an opportunity for a supervisor to review that time. But another way that an RPA could be used with payroll and time tracking is if it's a job-based system, the time could actually be tracked on a job-by-job basis using these fobs or timekeeping stations within the plant. And then finally, like I mentioned before, employee onboarding and hiring or review of employee resumes and things like that for people applying to positions could be a great example of where an RPA could be used. So we're going to move into our next poll question before I kick it over to Austin. So what areas of your business would benefit most from RPAs? And we have a few options there. I'll leave this up on the screen for a minute, and then I will kick it over to Austin, who's going to give another example of RPA in practice, and then we'll move into some applications for auditors too.
Thank you very much, Jason. So we're going to hit one more example of RPAs in industry before moving into public accounting / audit uses of RPAs. So one big one, just thinking about, mechanical routine tasks that don't require much brain power, but it's a lot of, administrative work, administratively taxing job of, going through credit card statements, going through expense reimbursement reports, the data entry of collecting amounts and as well as classifying them. So this is one ripe for RPA application, utilizing OCR, which, reading functions to extract data from receipts or invoices or statements. And then as well, you can utilize, preset rules, again, thinking of decision trees in RPAs. If-then statements like Jeff mentioned earlier, for For instance, the RPA proposing certain classification or coding based on the vendor, based on preset, rules or historical, the rules that you've set, as well as, pushing, if individual items exceed thresholds or new vendors or exceptions in whatever capacity, pushing those to a reviewer for human judgment. So just thinking about, this is sort of thinking about tasks that are administratively taxing that don't require much, human judgment to alleviate pressure on employees and organizations to push towards more higher level elements. Now we'll move into uses in public accounting and auditors as well. So, and these are tools for public accounting in total as well. We are using certain of these tools on select basis here and there. So I'll move into Inflow being the first one, which is an audit tool, though it is really ripe for use across the board in public accounting. So it really streamlines the collaboration and completion project between all the communication that happens between the public accountants and industry clients. RPA elements include email generation and status tracking elements, just reducing the amount of email traffic, heavy inbox and pinging things back and forth, and thinking about what is the status of certain requests, and then it automates sort of tracking of the status of all of the requests. Other elements of RPA in this is variance analysis based on preset thresholds or expectations. So just thinking about collecting data, collecting the trial balance, collecting GL activity, and pushing it against different expectations or thresholds for variance analysis, and then providing a smoother platform for sort of the collaboration process of inquiries and responses about variances in year-over-year accounts. Revenue cycle matching. There's a tool in this that traces revenue generating activities from point of invoice to point of collection, just based on analyzing the GL detail. There are certain elements that can automate selections for sampling, and then there's various other sort of reporting type elements, such as ratio calculation and report generation of different varieties. So we'll move to our next one, being MindBridge. So MindBridge has RPA elements as well as AI elements. Sort of a difference between the two, Inflow and MindBridge, is it seems that MindBridge sort of started with the AI or machine learning approach and then trickled down to RPAs, whereas Inflow, it seems, started with RPA and then moved up to machine learning elements, which they do have different machine learning elements in that tool. So that's sort of the difference between the two. This one, again, is more of a machine learning oriented tool. The biggest thing that it does is it helps with risk assessment and sort of identifying risks at the transaction level and assigning a risk score based on different elements, such as the frequency of transaction, when the transaction occurred, what was the user behind the transaction amounts, just various different variables that they seek to analyze, and based on data collected from the industry as a whole, or in that client specific case, assigning risk scores to that. And there are certain industry related or more reporting oriented or management oriented elements of MindBridge as well. There are some, just thinking back to, again, on the, thinking of routine mechanical processes that are a lot of data entry and data collection, confirmations of various types fit that bill, so to speak. AP and AR confirmations, confirmation.com is a pretty broadly used application or tool or site whereby auditors can correspond with banks or different vendors or customers or entities. as well as in revenue audits, just thinking of any sort of like the confirmation process that is very mechanical and sort of routine, a lot of just data entry and data verification. The industry is moving more towards sort of on the edge of thinking through continuous audits, the idea of real-time or almost real-time data collection and audit, as you go, almost real-time audits that would identify, using RPAs, identifying anomalies and errors or significant transactions that are, individually significant enough for auditors to test. And all this sort of takes a data validation flavor of, what Jeff said earlier, matching, different invoices or POs, matching different elements to that between those different documents to validate the transactions. And, it's more of a control-oriented testing. So we're moving out of the audit tools, and there's one tax tool that we'll highlight as well. So SafeSend is something in RPA, just, thinking of things that alleviate administrative burden on the whole process, both on the public accountant side as well as the client side. It automates the assembly of tax returns to a certain degree in terms of just the administrative factors there, and assists in terms of the signature processes, as opposed to us printing off something for signature and authorization approval and sending it to a client. These can all be done through a portal electronically that'll prompt the authorization signature, as well as link in payment portals and send reminders about remittance of payments and the like. So just thinking, these are some highlights as to how RPAs are impacting the relationship and the sort of more administrative items that occur between, public accounting type transactions and relationships. So we have one more polling question, and as I introduce this polling question, I'll hand it over to Jeff.
You want to read the polling question, or are you afraid that'll frighten the audience? Well, thank you, Austin, and thank you, everybody, as you continue to think about the polling question and answer that. I think it's a fascinating topic. We hope that it inspired some thoughts on your minds. To the extent that you are interested in any of these areas, please do feel free to contact us at the contact information included with your documents today. You can feel free to contact myself, Jason, Austin, or Mary Lou as indicated there. As always, and as I think it said as Bob Grossman kicked this off a week or two ago, thank you so much for supporting us. It has been our honor to provide these CPE seminars over the course of decades at this point. So with that, I will hand it to Carissa to close this session. And do remember to follow Mary Lou's instructions if you're joining us for the ethics hour momentarily at 4 o'clock. Thank you.